I want to make more money every single week. One thing that I think is key to this is, of course, these new weekly paying dividend ETFs, because there's only so much money I can make with my time in the day. Now, of course, as you guys know, these weekly paying dividend ETFs are not all created equal. Some outperform, some underperform significantly, and some do almost nothing. But today I'm going to talk about one of the best performers in our leveraged weekly dividend ETF account, and that is ticker PLTW. It is the RoundHill Weekly Pay PLTR ETF. Now, if you guys are not familiar with PLTR, it has been going absolutely crazy lately. Almost parabolic. It was trading for about $35 a year ago, and it has already hit $130 on a couple different occasions. Absolutely going nuts. But again, we will look at that in this video, and I think PLTW is one people want to look out for if you think PLTR will do well in the long run. Now, I am a fan. I don't own PLTW yet, so I'd say I'm not super biased, maybe a little bit because it is fun to watch, but we're going to do a full breakdown and invest $10,000 into this ETF and see how much money it would make you over 10, 20, even 30 years if you held it and it continued trading as it has. I guarantee these numbers are going to surprise you, but of course, if you guys are interested in dividends, in passive income, in weekly dividends, don't forget to like and subscribe so you never miss an update. Let's roll that intro. There is so much to unpack with these ETFs, but PLTW in particular hasn't had the best start. It's down 1.11% year to date, most of that being because we saw the whole market dip. Does this mean you would be red if you purchased at the beginning? No, it does not, because this does not factor in the dividends or distributions because this is an ETF. But the price range has been pretty wild, going from $44 on launch all the way down to $25, $26, and then going all the way back up to $44 just under. Now, I'm going to be talking about how I'm going to be trading these in my own personal account, but not quite yet, because I want to do a little more background information. I think first things first, we need to check the underlying stock, which is, of course, PLTR. As you can see, PLTR has had a much better return this year. It's up 74.6%. And at one point at the beginning of the year, it was at $65. This thing has rocketed, and then it fell off, and then it rocketed again, and now it's near or at all-time highs. So I am not buying PLTR anytime soon. I should have bought it a long time ago. I didn't. I missed the train on this one, and I am okay with that. Even if I cry myself to sleep once or twice a week, that's okay. I missed out on these returns, but I'm not going to be buying in just based off the hype alone. It's just not how I trade. This also isn't a typical buy for me because, of course, I'm a dividend-focused investor, but I do like having a few of these companies as well. Now, with PLTR, really solid return year to date. You start going out even farther, and this thing at 1 year ago was $20. You could have had a 519% return in a year, which is remarkable. But let's factor this into PLTW. Because it is that leveraged 1.2x, what we want is consistent upward momentum for the underlying stock. And why I'm not buying PLTW in my own brokerage account right now is because I think we are due for a little bit of a pullback. And even if the distributions are still relatively solid when it is in a pullback, it's just worrisome to me. I don't want the NAV drop because I don't know if it's technically NAV erosion. I don't know. I will admit, I am trying to figure out how these things work in a down week. So if you know, let me know in the comments. Let's say PLTW, it pays out a small dividend because PLTR went down 4% in a week. Where's the money for the distributions coming from? I meant to ask that in my last CEO interview. I totally spaced on it. I should have. It's a great question, but if you guys know, let me know in the comments so we can learn and grow together. The best explanation of that, please, will be pinned. So I appreciate that for those of you that are willing to share your knowledge so we can all grow together. But I really want to know that. I've been thinking about it for a long time. I looked it up and it's still foggy to me. Some things I guess I don't understand. But that's what we're looking for with these weekly pay leverage ETFs is consistent uptrends. Because otherwise you get small premiums, or I thought you might even get no premium, but no, that's not the case because we're getting paid out every single time from AAPW, even though it's been in the red. What we're going to do now, we're going to check out PLTW's portion of the website for RoundHill and see exactly how this fund works. It's so funny to me that we had monthly dividends and we were happy with them. And then all of a sudden we started getting weekly dividend ETFs and now the market is getting flooded with them. If you guys don't know, I did an interview with the CEO of Granite Shares. His name is Will Rind. He is a phenomenal resource. Let me just say, the guy knows every answer to every question I had. And I really appreciate his honesty. I expected the interview to go for 25 minutes. It went on for an hour as he broke down key concepts that only really a CEO would know from the industry perspective. Just absolutely phenomenal. So I'll link that video at the end for those that are interested. It's a longer watch. It's more laid back, and it ended up being more of a conversation than an interview. And he answered all my questions and then some. So check that out. But he talked also about the weekly dividend ETFs and how an ETF company, specifically his, how they're adapting, what they're going to do, and how it changes the ETF itself. So if you're interested in weekly dividend ETFs, I recommend going to that video and giving it a listen. But back to PLTW, again, pays every single week. That's what we want. We want that passive income every week. Then again, you also have the enhanced exposure. So PLTW seeks to amplify returns by targeting 120% of Palantir's weekly performance, which is great. Again, if you're long on PLTR, this is the weekly dividend ETF for you. And then again, it's also a powerful combination of single stock leverage and weekly income, which is hard to come by. But there are some things we need to talk about. First of all, it's a little more expensive. The expense ratio is 0.99%. In terms of the weekly payers, it's not expensive. It's very average. But in terms of all ETFs, it is definitely more expensive. The AUM is 33 million. When it first launched, it was at like 6 million. So we have seen it absolutely take off. But I don't know if it's even the most popular weekly pay ETF. There are a lot of these now and more coming out. So I'd be curious to see in a year or so which ones come out on top. And I guarantee a year from now, I'll still be making content on this. So again, like and subscribe. Now, holdings, you guys can go through, check all this info out for yourself. Performance, it's not really updated. Distributions, we're going to look at those on Seeking Alpha because it gives us a beautiful chart that I like to look at. But I want to know what you guys think. 53%. Can it keep that up? Are you guys purchasing PLTW currently, or do you have other weekly pays that you're interested in? Also, do you think the weekly pays are better than the covered call or the options weekly dividend ETFs? Because the leveraged one versus the options, right now leveraged is ahead. They're newer, but they are outperforming the option-based ones, which is something to think about. The distributions have been wild. The last one being 68 cents. Now, it is a little more expensive as a weekly payer at $40, almost $44, but 68 cents is great. And it's been up in the 60s multiple times. Had one that was a little bit less, but I mean, look at this. It's just remarkable. Started at 18 cents. 18 cents up to 40 to 50 to 30 to 20, back to 40, up to 60, and now we've seen it pay out in the 60 range for a little bit here. The dividend scorecard, this is going to be, it has a 13% yield because it's paying out weekly, but it has not paid out for anywhere near a year. So that's what's factoring into that. But all in all, I've been very impressed with the distribution so far, and I hope that it can keep them up. One surefire way to know if you are interested in an ETF or a stock is a drip calculator. If it pays a dividend and you want to see how it performs with the dividend reinvested or not reinvested, these things are phenomenal for all sorts of resources, and I like dividendchannel.coms. So we're going to chart 10K invested, and it's a little ugly, I will say. But like we saw at the beginning, the inception of this fund, it just dropped. The whole market dropped, and so did this. And now I will say as well, when there's a new weekly payer, I have noticed a pattern where they usually start off in the $40 range and in the first couple month or so, drop anywhere from the $20 to $30 range. All the ones I've purchased on inception have fallen quite a bit. Who knows if it was the market back then? I don't know if they do the same thing now, but that's just what I have observed, not financial advice. The remarkable thing is, with the latest run and the dividends kicking out while it was in the red, you bought some shares at a discount. And so PLTW, if you had invested 10K at the beginning of the fund, even though at one point you would have been down 35% plus, you're now positive by 17%. And on average, this is a rate of 62.55% every single year. Now that is going to be our key for doing our 10K invested calculation and see what exactly this thing can put out with in terms of dividends or distributions. So I'm really excited. Now, with dividends not reinvested, it's not too far off. Total return is 12.5%, annualized of 46%. So there is a difference because the dividends buying in the red really helped fuel when the thing bounced back. And that's what I have shifted my dividend focus to. Unless I see a stock like Main Street Capital, which is a lower yield, 8.5%, but consistently growing, that one I have drip on. Because there aren't a lot of times in the market where that is really cheap and I can buy a bunch more. And so that's the main reason. I like having my money invested, especially when it comes to those. I don't like having a ton of cash. So if you're interested in Main Street Capital and some lower yielding, high partial growth and high dividend growth stocks and ETFs, check out my other smaller channel. The link is down below in the description. I've been doing a bunch of content on there, including ETFs like SCHD. And so if you're interested in 10K on SCHD, I'll link that video at the end of this one as well for you guys. I hope you guys do enjoy it. But anyways, solid returns for PLTW so far. Can it keep it up? I don't know. But let's see how much we can make if we invest $10,000 into this ETF and it trades the same way it has been since its inception. I forgot how much math this portion takes. So what I did, I got our initial annual dividend yield. The reason I didn't just take it from RoundHill's website is because that's based off the current price and the last dividend or distribution paid out. So I took all of the 13 distributions we've seen so far, added them together, and divided by 13 to get the average. And then I multiplied that by a factor of 52, because there's 52 weeks in a year, roughly. There's actually a little bit more. So that ended up giving me roughly, I think, almost $21, which I then divided by the current price of almost $44, and that kicked out 47.82%. Hopefully that makes sense, but I like to do that because I like running the numbers myself because I'm a nerd. Anyways. So we can see I'm not putting anything in annually. We're just starting with our 10K, which is roughly 228 shares. We have individual stock. It's weekly. DRIP is on. And we have our yield. And I'm not including anything for price appreciation or depreciation. It's down about 1%. So you can factor that in over 30 years if you're interested. But it's just hard to tell because we never know what's going to happen with the actual price. So we could actually take off 1% of the dividend yield as well, but it factors in differently because the dividends have DRIP comparison to just price appreciation does not. Now, let's get into it. All right. After 1 year, your 10K is worth $14,781, which is very solid. If it could maintain these returns for even 5 years, I would be pumped. Speaking of 5 years, your 10K becomes $70,577 in just 5 years with DRIP on. Now, one thing that's key is you have $60,500 in dividends that have been paid, but your annual dividend income moving forward, because we have DRIP on, right? So we're keeping that $60K invested. Your dividends moving forward is now $33,749 a year, which after taxes is about minimum wage. If you were taxed, I don't even know what the minimum wage tax rate is currently, but in that tax bracket, taxes are complicated. Let me just say. I don't like taxes one bit, so that's why I'm not factoring them in here. But it is something to note if you're in a different tax bracket, a higher tax bracket. First of all, if you're in a higher one, congratulations. If you're in a lower one, I'm with you. All right. So not bad. After 5 years, I'm very impressed. We kick it up to 10 years, and this is going to really start to compound. It's the power of compounding weekly, which is roughly, your 10K is now worth $500,000. You're at a 4,881% return, and it's just phenomenal. You've been paid out $488,000 in dividends, of course, and now your annual dividend income moving forward is $240,000. This is 10 years with 10K invested. That's the power of how PLTW has been paying out. And I do want to point out as well, if you started with 10K and it was able to do this over a 10-year period, perform the same, which is unlikely and has never been seen before, you would be able to retire basically, right? Because after 10 years, you could just pull out some of the annual dividend income and you'd be set. You'd be making $240,000 every single year, which is more than enough for a lot of people to live off of. Hey, maybe you're bougie. I get it. Want to do some vacations, want to buy a boat. Who knows? I get it. So let's say 20 years because you want to buy a boat, maybe a mansion or two, maybe a vacation home in, Florida. You like alligators. 20 years. Your 10K is now worth almost $25 million. Now, if you're thinking this is totally not possible, we are thinking the same thing. Just because 20 years of a consistent near 50% return is hard to do. But if it was able to do it, it'd be phenomenal. We've had $24 million in dividends, and now you're making $12 million a year. So you could basically buy most of Florida. Not most with $11 million, but you could buy most of the properties available in Florida for $11 million if you found one that you really liked. But I imagine 30 years is going to be even crazier. And it is $1.23 trillion. So that just goes to show you, is this going to happen? No. I can confidently say it's not going to give this crazy return over the 30 years, but I don't know if it's going to do it for the next 6 months. I don't know if it's going to do it for the next couple years. It could maintain that high payout if we see PLTR continuing to trade as it has. And it just goes to show you, if you are interested in leverage, which is higher risk, and you can time the market a little bit, which I don't love trying to do, but if you find a consolidation point where you're saying, oh, I will buy PLTW at this point, I will buy TSW at this point, because you're watching and learning and tracking how these ETFs perform and how the underlying stocks perform, you can get some phenomenal returns. And as always, if you're interested in finding out what's going on with the weekly dividend community, don't forget to like and subscribe to the channel. And like I said earlier, if you're interested in the weekly dividends, check out this video popping up on your screen right now. And if you want to see SCHD's return on this exact same calculator, check out that video right there. And don't forget to subscribe to that small channel that I'm starting. It's kind of like my backup as well. So if this one goes down, I have something else to work on. I appreciate you guys. Thank you so much for all the support. I really think you're going to love the Will Ryan interview. So check that out. And I hope to see you in the next video.